Good morning, everyone. So let's start today's topic with a 30-second meditation. Take off your specs. Take off your specs. Close your eyes. Close your eyes. Fold your hands. Concentrate on Almighty God and express your thanks and gratitude for everything got in life. Take your parents' blessings by touching their feet mentally. Feel that all positive energy entering your mind, becoming stronger. Whatever we discussed today, we shall remember forever. Rub your hands. Touch your eyeballs, touch your cheeks and open with a gentle smile. So, that is a 30-second meditation helps to concentrate more, and it is very important for controlling your mind because mind matters most. And everybody remember why mind matters most. And now please don't talk amongst yourself. Please give mind to the class because mind matters most and concentration power most. Soham, concentration matters most. Otherwise, we cannot do anything in the world. We are trying to practice a little bit 30 seconds here, and it's my duty to tell you that is very important. And please, Chichand, please stop talking. So today I have taken a particular topic which I have already taught part of it, but other part I will give the just some ideas about the other part. It's very essential for theoretical background, and you should know it. And if I take some classes on this topic, then what I have taught earlier, last topic, this marginal costing will be more clear to you. So, this is very important. Two types of costing, two styles of costing. There are two major styles of costing. One is marginal costing, other is absorption costing. I will give you small breaks, so don't worry, then you can talk. But if you now keep on talking, then class will be meaningless. I will give you breaks. I will give you breaks to talk. It is very important. Let's take it very seriously. Because if you just concentrate, you are not going to have this type of class once again in life, maybe life also. Why should we have one more class? Have here only clarified, isn't it? So, marginal costing, all of you understood. We are now today discussing in the first part of the class. I will cover up this topic, and I will be asking one by one to come and explain. There is a very good system of teaching and learning. Because if one way traffic is not good, I have understood that at this point of time when you are going to be part of the management of any company, any government institution, whatever it may be, what matters most is presentation. You still have to present here and there in corporate, in education sector if you go, it doesn't matter how present. So, let us have some ideas here also. You have the idea, but let us do it systematically. So, what is marginal costing and what is absorption costing? This will be in your mind. It is given in the syllabus. So, I have picked up from the syllabus. What is marginal costing? You have understood that marginal cost means the variable cost of producing 1 unit or more or 1 unit less, 1 unit more or 1 unit. I have explained diagrammatically very nicely. You have understood, you enjoyed also. And I have done lot of questions of marginal costing like contribution. What is contribution? I have explained very nicely, and you have understood, you enjoyed. What is contribution? Sale minus variable cost. What is profit volume ratio? Why it is called contribution, why it is called profit volume ratio, that also explained. That was not from the book, but I explained and you understood. And what is break even point? Means a point of activity when there is neither profit nor loss. And I beautifully explained, you loved it. So please watch my video and share it. That evening means evening, even the old day is divided into day and night too, even. That is my concept only, I shared it this way. I love to think innovatively on certain concepts which I keep on teaching regularly, and I think also those things, and love to cherish those things and find out something and share with my students, and they understand. Basic thing remaining same. I will not change any basic things, but it is my way of explaining so that it remains in your brain forever. So, evening, you understood that. So, even means 2. When you break the sale price, you got 3 things actually. One is variable cost, one is fixed cost, that is a profit. And fixed cost, variable cost, profit, which is most important? Profit. No, profit depends on the cost. How you efficiently manage your cost, profit depends on that. Of course, you want profit, reward, at the end of the day you want profit, but for that you have to pay cost. And cost is again of 2 types. What is that? Fixed cost and variable cost. And variable cost is most important, more important than fixed cost in certain situations. So, variable cost and marginal cost is same thing, remember that, and after that we think of profit. So, that we have done You know how to find required sales. These things will be coming in the exam, remember, practical questions. Required sale when profit is given, PV ratio is given, fixed cost is given, one is missing. That requires profit also you can find that way, required loss you can find that way. Required means missing figure, you can find that way. And if you ever need more formula, we will be doing. And you have also understood what is margin of safety. When there is more sale than than break even point, more sale than break even point, then that gap is margin of safety. And do not confuse that margin of safety is not necessarily profit equal to. Marginal safety is the sale which includes profit. Many people confused that marginal safety is profit. No, total sale minus break even sale, that is margin of safety. So, margin of safety is also sale only having profit, but below margin of safety means below break even point there is sale but no profit. Above, yes, profit. How much above? That is margin of safety. Increase it, increase it. This is break even point, increase, margin of safety more, try to do. Profit will go up and up and up. So, if you understood marginal costing, now you see what is new thing has come. Absorption costing, mostly theoretical I will discuss, and other things will fill in the practical questions. In absorption costing, we do not distinguish between fixed cost and variable cost, those things, a normal way of doing, not minutely this way, many people do it, absorption costing. No discussion of fixed cost and variable cost and analyzing variable cost as I have done, not just going fixed cost variable put together total cost. So, this is the background of the subject, and now I will ask one by one, will be coming for 1 minute or 2 minute, and whatever I say you will be reading and we shall interact. It will be very interesting, because this steps of only lecturing I do not like these things. Sometimes it is necessary, but you are mature student, I want you to join, and you should explain also. The moment you can do it, it will increase your inner efficiency. So, starting from yes, Jashavant, please come. Jashavant, please come. First, let us start about what is marginal costing. Only from that we start.
So, marginal costing is a costing technique in which only variable cost, that is the cost that changes.
Will you come Jashavant this side? That will be better. This side it will be better for you. Please. So, you have to go by now 2-3 minutes only marginal costing, which you have already done. It will be very good revision also. Okay, why is so done only?
Marginal costing is a costing technique in which only variable cost, that is cost that change with the level of production or change to the cost of production. Fixed costs are treated as period costs, meaning they are written off in the profit and loss account for the period in which they are incurred.
See how beautifully he said, variable cost only, marginal costing, and fixed costs are also known as period cost. The time is overpay, permanent salary, time is overpay, rent. So, beautifully explained. So, go ahead. If there is anything mistake, no, something, because I have taken from net, if anything mistake I will correct and then share with you, and this will be your study material for exam also, you can have, but you can increase, please.
So, in simple words, marginal costing shows how cost and profit change with change in the level of output or sales.
So, how cost and profit changes with the level of output. That is the thing in simple. Then CIMA ka matlab I have given it. CIMA means what? It is a authorized, authentic institution of Chartered Institute of Management Accountants of London. According to their definition, please.
So, according to CIMA, Chartered Institute of Management Accountants, the definition of marginal costing is the accounting system in which variable costs are charged to cost units and fixed cost of the period are written off in full against the aggregate contribution.
Okay. So, variable cost is covered up from each unit. You remember I explained about, you can change it, you can give it to Srichand, and I told you that about making a samosa, you remember that 4 rupees is variable cost, something like that. So, from every samosa that has to be covered up. Variable cost has to be covered up from every unit, and fixed cost aggregate you do later on. So, do not think much about it. But variable cost, I told you that the carpenter did not sell this one table because price was given to him which was less than the wood price of the wood. Means variable, he will never give it. At least the variable cost must be covered That is the sense. So please read once again. ऊपर में आ जाओ. Definition.
Okay, CIM.
Yeah.
So, definition of marginal cost according to CIMA is the accounting system in which variable costs are charged to cost units and fixed costs of the period are written off in full against the aggregate contribution.
So total contribution, from that you think of covering total fixed cost. Don't worry unit by unit, but variable cost goes by unit, because each unit extra means little variable cost extra, each unit less means little less. So you analyze that part only. Focus is on variable cost means marginal cost. So it's a very big, beautiful definition. Features.
Okay, the key features.
तुम आ जाओ तुम बोलते रहो.
The key features are, first one is variable cost. Variable costs are considered product costs. And next is the fixed costs are treated as period cost.
So that you remember, number 1 and number 2 very beautifully said, these two terms. Why? You can understand. Product cost means product cost.
Procurement cost.
Product cost means everything is product cost in fact ultimately. But each product cover a variable cost that much from each product. You purchase or you produce, suppose pen. So producing one pen, how much is variable cost? Cover from each pen sale, each. That is the thing. And total fixed cost, you take as a period cost. What is period cost? It depends on time. Fixed cost is depending on time. Agreed or not? Fixed cost is depend on time. 1 month is over, full salary received by the permanent employees. And sometimes, it depends on the work. Mostly it's a variable cost. Please.
Third one is it helps in finding contribution margin, that is equal to sales minus variable cost.
So we have understood contribution, no need to explain next.
Fourth one is useful for decision making such as pricing, make or buy, and determining break even point.
Okay, explain this line.
Last
line explain.
So it's like we can decide using this what was margin cost, like we make or buy. If you want, you can buy or
means
like
a particular product or part of the product you shall buy or you shall make. You are producing something, but one particular part of it you can purchase or you can make. What you shall do? So go by costing. You can purchase all the small parts and assemble in India and write it made in India. And you purchase all small parts from China, then Japan, small things come and make and assemble and make the car and make it made in India. But parts are made outside the country or outside the company. So that parts you purchase. Sometimes you may think, instead of purchasing these parts from outside, let us make ourselves. So make or buy, which is less costly, you do that. Who will give this decision? Marginal costing. इसलिए that's why we learned this thing. इसको दे दो, एग्जाम्पल बता दो. अच्छा ऊपर नहीं कुछ नहीं है, कहते हाथ में रखो. या
ऐसे डाल रहा हूँ.
गुड बॉय. करो एग्जाम्पल बता दो.
Let's discuss the example.
See, example देखो everybody.
If a company sells a product for 100 rupees and the variable cost for each unit is 60 rupees, then the contribution is the price of the product minus the variable cost.
Excellent, clear? Yes.
Which is 40 units per 40 rupees per unit, which is the contribution, and the total fixed cost is 20,000. It is for a long period of time. We will take that is a fixed cost, and for each variable for each product the contribution is 40 rupees per unit. So we are producing 1,000 units. Multiply that 40 per units into 1000, then we will get 40,000. From that the total fixed cost, we are removing the total fixed cost, then we will get the profit for a long period of time.
That means in contribution, what are the two things?
Profit plus fixed cost.
Profit plus
fixed cost.
Good. So from contribution you have deducted the fixed cost, you have got the profit.
Profit.
Any way you can do, just have the formula in mind. So this is a beautiful example, I need not explain because I have already done and I am verifying whether you have understood or not. Yes, advantages of marginal costing. Batao.
First one is simple and easy to understand. The method is simple because it separates cost into fixed cost and variable categories, making calculation and decision easier.
Continue.
The second one is helps in decision making, useful for marginal decisions such as pricing, make or buy, product mix and shutdown decisions. The third one is assistant in cost control. Since fixed costs are treated as periodic costs, managers can easily control variable costs related to production. The fourth one is facilitates break-even analysis. Marginal costing helps in analyzing the relationship between cost, volume and profit CVP analysis and finding the break-even point. The fifth one is useful for short-term planning. It helps in determining the most profitable level of output or sales in the short run.
So we have seen the advantages, I have given it for your exam purposes, but you can of course increase. You can increase and I am verifying because I have already taught, so I am not teaching, you teach yourself. Please come next. You shall explain the limitations. Oh, one more advantage left, number 6 advantage you read. Number 6 advantage.
Number 6 avoids under or over absorption of overheads. Fixed overheads are not allocated to products, so there is no problem of over or under absorption.
Yeah. Absorption costing includes both fixed cost and variable cost. There is some lot of problem, I will show you. But in marginal costing, this problem does not arise. Absorb means covering up. Absorb means if you include in the cost sheet, absorbed. You have seen cost sheet. You include all cost in the cost sheet is absorbed. You miss out something, unabsorbed. In marginal costing, this point does not arise. Okay, limitation.
Limitations of marginal costing. Difficult to classify costs. In practice, it is not always easy to clearly divide costs into fixed and variable categories. Second, ignores fixed cost in product cost. Fixed costs are important in the long run. Ignoring them can give an incomplete picture of total cost. Third, not suitable for external reporting. Financial statements prepared under marginal costing are not accepted for external reporting or taxation purposes. Fourth, less useful for long-term decisions. Since fixed costs are excluded, marginal costing is not suitable for long-term pricing or investment decisions. Fifth, stock valuation may be unrealistic. Closing stock is valued only at variable cost, which may understate the value of inventory.
In short,
marginal costing is very useful for internal management decisions and cost analysis, but not suitable for long-term or external financial reporting because it ignores fixed costs.
because I told you one day that it concentrates only on marginal costing, only on variable costing, but a time comes when even fixed costs are variable up to a particular limit. So, this is a point to be thought of. Absorption costing.
Absorption cost.
Just wait. So, let us now start marginal costing. I have explained, just revised, because I am not going to come back to these theories. I am going to some new chapters to start very soon. So, it is revisional class, and now learn what is absorption costing. Little bit you have got the idea also, but let us go by absorption costing. Samjhao.
Absorption costing. Meaning of absorption costing. Absorption costing is a costing technique in which both variable and fixed costs are charged.
Both are
to the
charged
cost
together.
of a product.
In marginal costing only variable, here both are taken into consideration from beginning only. Chalo.
In other words, all cost of production, direct materials, direct labor, variable overheads and fixed overheads are absorbed into the total cost of the product. Hence, it is also called as full costing method.
Like you have seen this one, cost sheet and all, like that we do it. Next,
Definition.
features, definition.
As per CIMA London, absorption costing is a principle whereby fixed as well as variable costs are charged to cost units and total overheads are absorbed according to the level of activity.
So, you have understood both costs are taken into consideration. Just to remember one thing, both are taken into consideration, both fixed and variable taken together. But in marginal costing, only variable. Chalo. Features.
Key features: all costs, including variable plus fixed, are included in product cost. Fixed overheads are distributed to all units produced. Closing stock is valued at total production cost. Used for financial accounting and external reporting. Suitable for long-term pricing and profitability analysis.
Okay. Formula?
Formula: total cost equals to prime cost plus variable overheads plus fixed overhead.
Prime cost you understand from cost sheet? From cost sheet plus variable overhead plus fixed overhead. This we shall do in practical later on. But now I have given the idea, so practical will be very easy for you. एक example बता दो.
Example: if a product's variable cost per unit is 60 rupees and fixed overhead per unit is 20 rupees, then total cost per unit will be 80. If selling price is 100 rupees, then profit per unit will
Straight
be
away,
20
shortcut,
rupees.
everybody can do it. But marginal costing is some specialty. In short,
Absorption costing equals to total costing. It includes both fixed and variable cost to determine the full cost of the product.
have you found the difference between absorption costing and marginal costing? In very, very short, simple one. What is that? One line only, one line.
In absorption costing, we include the fixed cost. And in marginal costing,
No, in absorption you include both.
we include both, and in marginal costing, we include only variable.
Clear? Okay, चलो. Next आ जाओ. तुम पढ़ते हो. Still
Advantages
of absorption costing.
First, consider all cost. Absorption costing includes both fixed and variable cost, giving a complete picture of total production cost. Second, helps in determining true profitability. Since all costs are included, it shows the true profit per product or department. Third, require for external reporting. It is the method accepted under accounting standards for preparing financial statements and inventory valuation. Fourth, useful for long-term pricing because it includes fixed costs. It helps in deciding selling prices that ensure all costs are covered in the long run.
So, this is about advantage of absorption costing. You see one more left, you include that, come here.
So, fifth
Limitation, advantage one more left.
advantages, fifth one, encourages full utilization of resources. It motivates managers to make better use of production capacity to spread fixed cost over more units, reduce cost per unit. So, limitation of absorption
Limitations.
costing.
Galina, limitation.
Limitations of absorption costing. Difficult to control cost.
Difficult to control cost because you are taking both together. When you take only marginal or variable cost, is better controlling. That's it.
Since fixed costs are included in the product cost, it becomes hard to control them separately. Arbitrary overhead allocations. Allocations of fixed overheads to different products is often based on estimates, which may not be accurate. Not helpful for decision making. It does not clearly show.
Explain also, a little bit explain also.
Not helpful for decision making. It does not clearly show how costs change with output. So it's less useful for short-term managerial decisions like pricing or shutdown. It does not significantly help in the decision-making process
Okay,
while
one line
pricing.
only.
Profit affected by production volume. Profit may appear higher if production increases, even if sales do not, because part of fixed cost is carried in the closing stock. Complex and time consuming. Determining suitable absorption rates and allocating overheads properly require detailed and sometimes complicated calculations.
So, which is better?
The first one is better.
So, you tell in 1 minute both, including both marginal and absorption, just about your idea you share. You have done 2, we have seen 2.
So, marginal costing includes only the variable cost, whereas the absorption cost includes both the fixed and the variable cost.
What have you seen the difference between the two? Your ideas.
Calculation by using variable cost is easy while calculating by absorption costing is complex and time consuming. and even in the decision making process, it is better to use the
Marginal costing.
marginal costing, which includes variable cost only, rather than using this for decision making, as even fixed cost is included.
So, you've seen both types of costing having some advantages, some disadvantages.
Yes, yes,
So, it will be good to study the comparative study between the two now.
yes.
So, okay, now you will be doing the comparative study between the two costing. This is your time. Okay. Now, we have seen what is variable cost, what is marginal cost. Now, let us go by the comparative study between the two types of costing. Whatever already taught, in that only she will be telling. Come here. Compare between the two one by one.
Difference between marginal
ऊपर में आ
costing.
जाओ. हाँ.
Difference between marginal costing and absorption costing. So the meaning of the marginal costing is that it is a costing technique where only variable cost, direct material, direct labor, variable overheads are charged to products. In absorption costing, it is a costing technique where both fixed and variable costs are charged to products.
Okay. So, we are doing the difference between marginal costing and absorption costing. Now, next point you give it to him. Next point, come. Second point, distinction between the two types of costing.
The second point is treatment of fixed cost. So then marginal costing, fixed costs are treated as period costs and are not included in product cost. But in absorption costing, fixed costs are treated as product cost and are included in the cost of production. Now we are coming on to the third point, that is cost per unit. In marginal costing, includes only variable cost per unit, but in absorption costing, it includes both variable and fixed cost per unit.
Give it to Vishal. Vishal number 3. Distinction between marginal costing and variable cost and absorption costing.
Profit calculation. Profit is affected by changes in sales volume. In absorption costing, profit is affected by changes in production volume. Fifth point, stock valuation. In marginal costing, closing stock is valued at marginal variable cost only, whereas in absorption costing, closing stock is valued at total cost, which is fixed cost plus variable cost.
Okay, give it to Soham. Next, distinction between marginal costing and absorption costing.
Stock valuation. Fifth, stock valuation. Closing stock is valued at marginal cost only. Closing stock is valued at total cost, fixed plus variable. Then usefulness. Marginal costing is useful for short term decision making such as pricing, make or buy decision, etc. And absorption costing useful for external financial reporting and determining total cost. Objective.
तुम बोलो objective बोलो. You come.
Marginal costing objective to find the contribution margin and analyze cost volume profit relationship. Absorption costing to determine the total cost and overall profitability of production.
Rahul, you should sum up the differences. Give it to him. You should sum up the whole differences between the two. Starting from here, come here.
So in short, marginal costing takes variable cost basis. It helps in short term decisions, and absorption costing is equal to total cost basis. It is used for full cost accounting and reporting.
Explain करो दोनों में.
So in marginal costing we take account of only variable cost. So in short run it is useful because we take account of variable cost. So in short run it is useful, and in long run we take account of absorption costing we take account of fixed cost as well. So in long run it is helpful because in long run it gives a clear picture how a business should operate.
Good, give it. So you should be telling. You should be telling any point you can pick up and explain any point you can pick up. I am giving from the beginning. This is the you can pick up any point. The difference between the marginal costing and come here. Marginal costing and
absorption. सर तेज वो कुछ नहीं, सर ने बोला मेरे बाद बुलाएंगे. So any point.
Any point. One point is to explain. Anyone.
Okay.
Pick up one at random.
So treatment of fixed cost में fixed costs are treated as period cost and are not included in the product cost. Fixed cost, and in absorption costing the fixed costs are treated as product cost and are included in the cost of production.
Okay. One more point.
Cost per unit में when it comes to marginal costing it includes only variable cost per unit, that is the formula, and absorption costing में includes both variable and fixed cost per unit.
You can pick up any point.
So the meaning of marginal cost is the costing technique where only variable cost, direct material, direct labor, variable overhead are charged to product.
Nandini. Bolo, 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 you continue.
Achha, and absorption costing is a costing technique where both fixed and variable costs are charged to products.
Any one point you can pick up. Difference, any one point.
Stock valuation. Closing stock is valued at marginal variable cost. Closing stock is valued at the total cost, fixed plus variable. Usefulness. Useful for short term decision making such as pricing, make or buy decisions, etc. Whereas in absorption cost, useful for external financial reporting and determining the total cost.
Yes, give it to him. Any one point you pick up and explain with the difference between the two.
Now the basis of difference is the profit calculation. Profit is affected by changes in sales volume, and here in the absorption cost, profit is affected by changes in production volume.
Well, continue till he comes.
Now the cost per unit includes only variable cost per unit, and this one includes both variable and fixed cost per unit.
Any other thing you comes to your mind? Tell difference.
Okay, sir.
कुछ भी आता है मन में बोल दो. Before he.
Sir, in the marginal costing, we only take care of the variable cost, and in the absorption cost, we take care of both the fixed cost and the variable cost.
Very good. Here you could pick up any point and express your views between the differences.
So, in marginal costing, the profit is affected by changes in sales volume because it accounts for variable cost only, and in absorption costing, it includes both. The profit is affected by production volume because absorption costing accounts for fixed cost as well as variable cost.
Good, very good. Okay. Teja, you have understood all these things you found. So there are two main types of costing. What are they?
Marginal costing and absorption.
You can pick up any 1 point or 2 point. You will explain.
The first 2 points.
Difference, anyone.
When it comes to meaning, marginal costing is a costing technique where only variable costs like direct materials, direct labor and the variable overheads are charged to products. And absorption
You came,
costing,
no? He came.
Absorption costing is a costing technique where both fixed and variable costs are charged to products.
So how did you find today's class about the differences I have done? What are the things I have done today?
So, you have explained about the absorption cost.
No, at beginning, marginal.
Marginal costing.
Then what I explained there? Difference, no, meaning, advantages, limitations, then absorption costing also.
Yes.
And then last one, topic heading.
The difference between the marginal costing and the absorption costing.
Okay, last one point you tell, sum up, last point in short, sum up that.
Okay, when it comes to the usefulness, it is useful for short term decision making such as pricing, make or buy decisions, etc. And when it comes to the absorption costing, the useful for external financial reporting and determining the total cost.
You loved it?
Yes, sir.
Thank you, everybody.